Hello, good morning, guys. I believe everyone is doing very well. This is 2026, and forgive me, guys, I've been very, very tight recently, and I'm not even getting opportunity to upload videos, even though I'm still actively trading. But this morning, I just want to let you guys know I'm still around, all right? So I'm going to analyze one pair, Euro JPY, all right, for this week, what I'm expecting to happen on Euro JPY. All right. So, how was the January trading session for you? January is that time when the market is now trying to find stability because of the end of year comeback. So, January, most of the time, the market is quite unstable. But if you have patience, definitely you are going to be profitable. But most of people would also, if care is not taken, will blow most of their accounts and all that. But so we are in February now, and I believe that we should still be patient and look at the market world trade with patience and caution. All right, because definitely if you are into forex, the encouragement is that you are being inspired by what other people have done, all right, and you can also do same. You are not just inspired to copy them, all right. What I'm saying is that you are inspired by the possibilities in this industry. Is okay. So if you look at if you are new to this channel, kindly subscribe to the channel and leave a comment in the comment section. And for me, I read every single comment you drop under my video. So kindly leave your comments in the comment section and I would get back to you regarding a question. The beginning of the year, I recommended two books, Trading in the Zone and Dealing with Your Mindset as a Trader, all by Mark Douglas. I don't know which of you read the book, but I believe that you need to start looking at the book. If you can get a hard copy, get it. If you can download a soft copy PDF, get it online and go through the book. These are some of the things you do when you have free time, all right, as a trader. You read books regarding forex trading to shape your mindset. You watch movies like Wolves of Wall Street. It shapes your mindset, it shapes your perspective about this thing. Then you now know that I'm actually part of the international trade market. Some traders are already, they are not in out of touch with reality in the sense that they just think I'll go there and make money. No, it's you're actually a part of the global trading ecosystem. It's okay, and that's who a trader is. So I want you to take your time and read those books. But let's go back to our analysis. Euro JPY. All right, I'm on the 4 hour time frame, and as you can see, the first thing to look out for is the trend of the market. All right, which is the market structure. All right, according to the May formula I've been teaching you for some time now. The first to look out for is the market structure, and you check whether it's in an uptrend, downtrend, or a consolidation or a range. Is okay. And when it's in an uptrend, what do? You only look for buying opportunities. When it's in a downtrend, you look for selling opportunities. And when the market is in a range, you try to stay out of the market or allow the market to breathe until it gives you an opportunity. And all this while I've been analyzing buy and sell trades. I've not really touched on when the market is in a range of consolidation, what are the processes you go through to look out for as an entry opportunity. So this market, as you can see, is a range. All right. Let me first take you through what the range looks like. In an uptrend, you see the market go up, you traces, all right. Sometimes, goes up, you traces again, breaks this high, you traces again, breaks this high. Sometimes it does its own thing, but it's still at breaks, breaks. Are you seeing that? So now you can see that the this place is the higher high, higher low, higher high, higher low, higher high, higher low. So what is happening is that you will see that this place, this higher high here, was broken. All right, this higher high, this particular higher high was broken by this one. Then it formed a new, how do you call it, higher high. All right, it formed a new higher high here. So we have a new higher high at this point. Then when the price came down, it came to retest this particular high. Then it went all the way up, broke this high again. Then you have a new higher high. Came to retest again at the support, all right? And this the higher high are the resistance zones, the support are the lower low, the higher lows are the support zones. So anytime the price goes and break this previous high to form a new higher high, all right, then we are seeing that the market is in an uptrend. Hope you get me now. Yeah. Then how does a downtrend looks like? How does a downtrend, oh, sorry. How does a downtrend looks like? You notice that the price will come down, go up, come down, go up. Are you seeing the trend? Down. Sometimes it's not really that straight, like I'm saying. The market doesn't move in a straight line. All right, so something like this. So you see a lower high, a lower low. But what is happening is that the price goes to retest at the lower high, then it comes and breaks this lower low and forms a new low at this point. The price retraces again, retests the lower low here, is okay, and comes down to break this lower low, then it forms a new lower low. So the series of lower lows and lower highs gives you what we call an uptrend in the market. Then the range market, which is going to be the focus of this video because of the particular pair we are analyzing. All right, we see the market go up, come down, goes up, come down, goes up, come down, goes up, come down. You see that kind of thing. So we can see that the market is going up and down. And it is, if you are looking at it, well, it is confined between these two highs and lows. Have you seen that? The market is confined between these two highs, and which means that when the price gets to this premium zone, you can look for a selling opportunity. The price gets down, you can look for buying opportunity. But most of the time, the advice we give is that in a range, because the market is not clear, you are advised to stay out of the market. It's okay. You are advised to just stop trading that particular pair and look for opportunity as well. But always, so after that, what are you expecting? That's what I'm going to focus on. So imagine, look at this particular one. Right from this point, right from here, let's start from here. You can see the price went up, retested here, went up, retested, went up, retested. So what are you using? Went up, retested, and the price suddenly breaks. So from this side and this side, all right, you can see that the market was in a range there. I'm talking about this point. Are you seeing that? From this point, you notice the market is in a range, all right? Then suddenly, when we tested here, the price broke these highs again and formed a high, then came back. It never came down again, all right? Then we moved to an uptrend. So it looks like this. Then the price broke through. Are you seeing that? So right from this side is a consolidation range. When the price broke, we now have an uptrend forming here. Do you see that? Yeah. So all those things are possible. So the price broke from that range and we formed. Now we have this. Yeah, it broke these lows. Is okay. Then the price broke again, came to retest, broke again. So this has been happening for all these while. Are you seeing that? So that's where the market currently is. And as you can see, um, trying to clear this drawing. Yeah, good. So now let's come back to the market. What are we seeing now? We can see that the price is currently confined between these highs. You see this high and these lows for some time now, between these highs and these lows. For example, between this high and between this low. All right, between these highs and lows. So I can say that the market, boldly, that the market is, even if I bring it here, the market is in a range. Is okay. So what I would do is to just plot my support and resistance. Just draw my support and resistance. And I would have it like this. At this point, it tested here, tested here, tested here, tested here. So I can place my support at this point. My support can be put here. I can put my support here. Then my resistance, it tested here, tested here, tested here. It broke. It broke, it had been testing here, testing here. Then the price came to break and came all the way down. All right. So what I can do about that resistance zone, about that resistance zone is sorry guys, about that resistance zone is to draw it somewhere here. All right, is to draw it there. Let me just put it here. So this one will be like a false breakout. This part is what we call a false breakout. All right, or what SMC will call manipulation is okay because it will just take out people's stop losses. Because imagine if you wanted to enter the trade from this point, that means especially at this point, all right, what that means is you have your take profit down here. All right, let me use this nice tool to show you. Um, sorry guys, trying to, yeah. So at this point, let's say you're entering from this point. That means you set your take profit down here. Then your stop loss most likely will be here. You see, except you give it a buffer, which would have increased your stop loss, all right, or your loss. So let's say you set it here. That what that means is the price would have liquidated you or manipulated you. The price would just have hit your stop loss before returning. And that's the most painful thing in trading. You predicted correctly, but it took you out before the profit started coming, which is very, very, very painful. Is that okay? So that's it. So you always take note of this. How do I avoid these things? How do I avoid this? Which means that probably where I set my support is not good. So I can rather go back and put another support here, and I have this indicator high and low to show me the actual highs and lows in this market. So actually, these are the highs in this market. It just identifies the highest point. So I could have put my this thing here. But I notice I don't have multiple touches, so I prefer to do it here. I get in there. Yeah, so this what will happen. So now, what am I expecting? I'm expecting that the price would go here, is okay, retest here, come down here, is okay. Then the price will sell up, buy up, sorry guys. The price will buy all the way up to the high. So in between this point, see this point, I don't have any business trading there. Between this particular point, I don't have any business. Is okay trading there. Even though you see tested here, tested here, tested here. So you might want to look for some price action signal here to look for buy. But for me, I don't like to trade at those areas because there's no sense. Even in SMC, they call here premium and discount zone. They only sell in the premium zone and buy in the discount zone. Same for our strategy. You only buy at the support zone with price action candlestick confirmation. All right, then we only sell at this resistance zone with price action candle confirmation. But here in between here, all right, I don't have any business. So for example, let me show you this. I would have a box. You see this box, I would have a box like this. Then I would how do I put it? Let me do it this way. Let's say we divide in equilibrium, in equal balance, is that okay? Then equally, what that means is up here, up here, up here, up here is where I'll look for selling opportunity. And down here is where I'll look for buying. But why? People like to buy things at a lower price. Producers like to sell things at a higher price. Is that okay? So, economics even apply here. Is that okay? Yeah. So that is the essence or the wisdom around these things. So here, really, here, I wouldn't like to enter trade. So all I'm looking for is the price to do whatever it will do, come down here, then I'll look for buying opportunity. Is that okay? Yeah. That's what I will be looking for in this particular currency pair. So let's go back to the 15 minutes time frame. That's what you look for an entry reason. And as you can see here, this is the 4 hour zone. All right. And you can see from this point that the market has tested multiple times within. Here tested, even though it broke, it tested, it tested, test, all that. So that multiple test can be something you want to, not for long-term entry, right? But just for short-term entry, you can put your support zone at this point. When the price reaches here, you can look for a small buy. Is that okay? But what I anticipated is that the price will come down, then I'll look for a big entry up to the upside. It's okay. This is how it goes in. So this particular, and I've told you that trading range is very, very, very hard. So you know how long I have to wait for either the price to return, or I see the price returned. Let's see something. The price returned here, went up, returned here, also went up. It's okay. So I'm anticipating the price returns again and goes up again. It's okay. A trading range is very, very hard because you don't have a clear direction. It's okay. So yes, I still advise that you can choose to stay out of the market if you are going to be confused. But if you want to test out trading range, then you can also use a demo account with some few dollars inside. Then use to back test how to trade a consolidation or ranged market. Is that okay? And for me, this is what I would basically be expecting. So all I'm looking out for now is to let me put my entry bar here, maybe put it here all the way up to this part. Is that okay? And put my stop loss here. You can see this is 1:4.7 trade. If it should finally come down, all right, if you finally come down all the way here, then entry will be very, 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 very sweet. It's okay. Otherwise, I don't have any trading opportunity. So the patience is that if the price doesn't come to this zone for me, I have no business entering the trade. It's okay. And that's why we talk about patience when trading the forex market. You don't do what you feel like, you do what the market tells you to do. It's okay. So guys, this is my outlook for this particular pair. And I would be very, very, very patient. Oh, wow. This would be a very nice entry. Trust me. See, 1:7.14. Imagine the price comes here. So I can also go to my MT5 and set, how do I put it? Um, this is how it's going to be. I can go to MT5. Let me draw this down a bit. Let me give my trader buffer some room to breathe, right? And set a buy limit. All right, I can set a buy limit at this point. I say C. So let me bring it down here because this share price has really tested. And trading is very, very technical. See something here. I noticed anytime the price gets down, it reverses here, somewhere here, somewhere here, somewhere here, right? So definitely if it's going to have a re-entry at that point, then the price should be able to come down, probably retest this lowest. You see this low, see where it is low, almost hitting my stop loss. Therefore, that place can really not be my stop loss. So I have to now move my stop loss down a bit, adjust it a bit as well to give my trade some room to breathe because if it's the lowest point it had, likely the price will come there. Is okay. Then entry will be at this particular point. So I'll just be patient and see how this one plays out. It can play, it can also not come. It doesn't mean I've missed it. Is okay. So that's how this thing is being analyzed. Thank you very much for joining me in this video session. And I hope you learned something new about trading the range market. Is that okay? And I would ask you to leave a comment in the comment section. Anything you don't understand, if it's a question, if it's anything at all, you can leave it and I will respond to you as soon as possible. And kindly subscribe to your channel if you are new here. Share this video to as many friends as you have. All right, and get them to love forex. Thank you very much. See you in the next video.